Frequently asked questions. The exchange equation, or another way to look at this, what are the requirements for full tax deferral in a 1031 exchange? So for full tax deferral, a taxpayer really just needs to meet two fairly straightforward requirements. Number one, they need to reinvest all of the net exchange proceeds. And I emphasize that word net. This is the net proceeds after paying exchange expenses and closing costs, things like the real estate agents or brokers commission, the title company fees, the recording fees, the qualified intermediary fees. So it's the net exchange proceeds. On a settlement statement, you would see that as the net proceeds due seller. So those are the net proceeds. Number two, acquire property with the same or greater amount of debt. So you look at the mortgage payoff on the relinquished property, and you want to have at least that much mortgage on the replacement property, or if you're buying multiple replacement properties, that in aggregate the mortgage exceeds that. So the term for money that's taken out of the transaction is called cash boot. That's a situation where somebody receives some of the proceeds. If somebody has a reduction in their mortgage liabilities, that's called mortgage boot. And those are both taxable to the extent there's a capital gain tax consequence. Now, one caveat to these two rules. A taxpayer can go down in debt if they offset that by adding additional cash. So let's say a taxpayer has a $100,000 mortgage on the relinquished property. They buy a replacement property with a $70,000 mortgage. So they have $30,000 of mortgage boot. However, they bring in outside cash of $30,000 to offset that. That results in a situation where there is not a tax consequence. What I like to do is go through a few different scenarios on these slides to help illustrate this whole concept of the exchange equation and really what you need to do to obtain full tax deferral. So a property is being sold, the relinquished property has a value of $900,000. The debt is $300,000. And then the closing costs, the cost of sale, are $60,000. So again, the real estate commission, title company fees, qualified intermediary fees, etc., leaving net equity of $540,000. The taxpayer purchases a replacement property that is $1.2 million. Their debt of $300,000, they replace it with $660,000 of mortgage on the replacement property. So there's no mortgage boot. They reinvest all of their net equity, the $540,000. So this is a situation where a taxpayer has no boot at all. So this is an example of full tax deferral. On the next slide, we're going to look at partial tax deferral. So the taxpayer sells the property for $900,000, same numbers. They purchase a replacement property for $700,000. So one good indicator, and again, this is a rough indicator, if a taxpayer goes down in value substantially on the purchase, they're most likely going to have some taxable boot, some boot on the transaction. In this example, taxpayer had a mortgage of $300,000 on the relinquished property sale. They purchased a property with only $260,000 of mortgage, so they have $40,000 of mortgage boot. They only reinvested $440,000, so they received $100,000 of cash out of the transaction. Now to look at the total boot, you add the mortgage boot to the cash boot, which is $140,000 of boot. So this is an example of both mortgage boot and cash boot and what the tax situation would be. And then on the final example, we're going to look at a situation, taxpayer sells for the same amount. They buy a property for $800,000. Their mortgage goes down from $300,000 to $260,000, so they have $40,000 of mortgage boot, and yet they reinvest all their cash. This is a situation of $40,000 in mortgage boot. So again, kind of going back to what was said at the beginning of this segment, for full tax deferral, a taxpayer now needs to, number one, reinvest all net exchange proceeds in one like-kind property or multiple like-kind properties pursuant to the 1031 rules and Treasury regulations, time deadlines. And number two, acquire property with the same or a greater amount of debt. Those are the two requirements that are important to keep in mind. To review your specific 1031 exchange situation, contact Asset Preservation's headquarters in California at 800 282 1031 or our Eastern Regional Office in New York at 866 394 1031. Please read the full disclaimer, as Asset Preservation cannot provide tax or legal advice.